If you've been watching the Greater Victoria real estate market lately, you've probably noticed something confusing. Some people are saying it's a buyer's market, others are saying certain homes are still selling well. And the headlines don't always line up with what buyers are actually seeing on the MLS. That's because Greater Victoria isn't one single market. It's made up of a lot of smaller micro markets that are behaving very differently right now. And in some of those softer markets, something important is happening that doesn't always show up in the stats. A quick refresher: a seller's market is when demand is high, inventory is tight, buyers compete, and sellers have leverage. A buyer's market is when inventory builds, demand slows, homes take longer to sell, and buyers regain negotiating power. What matters in Greater Victoria is that both of these conditions can exist at the same time, depending on location, property type, and price point. That's where a lot of people get tripped up, especially if they're thinking about making a move. Here's the key point I want you to take away. In softer markets, prices don't always fall dramatically, but inventory quality almost always improves. That's the part most buyers miss. They're watching prices, but they're not paying attention to what those prices actually are buying them today compared to a year or two ago. When markets shift and pressure comes off buyers, there's less urgency, less competition, fewer rush decisions, cleaner negotiations. Buyers stop compromising just to get in, and sellers start adjusting expectations. Often the final sale price doesn't change much on paper, but the homes available at those prices get noticeably better. That's the real shift. Not all price points behave the same way. A condo around $850,000 responds differently than a detached home around $1.5 million. But what's interesting is that both prices tend to show the same pattern in a softer market. In a softer market, quality improves before pricing pressure fully works through the market. And in some segments, that combined shift, price plus building quality attributes, can be quite meaningful. At around $1.5 million in a hot market, buyers were often choosing between busy roads, tired or heavily rented homes, compromised lots, dated interiors, minimal seller flexibility. In today's calmer conditions, the same budget can now buy homes on a quieter street or cul-de-sac, better lots, improved layouts and light, renovations already done, homes that simply live better. The price might look similar, but the lifestyle and long-term value are very different. The condo market shows this even more clearly. In a strong market, around $850,000 might have meant about 900 square feet, a middle unit, an older building, limited outdoor space, one parking stall. Today, that same budget may now include more square footage, newer post-2000 construction, better layouts, larger balconies or views, extra parking or storage. Again, prices haven't necessarily adjusted dramatically on paper, but in some segments, the combined value shift has been very real. This is why buying up in a softer market can make sense for the right move. When you sell and buy in similar market conditions, any softness affecting your sale also applies to your purchase, and higher price homes often adjust more in real dollar terms. Competition tends to thin out at move up price points. Even if you sell slightly below peak conditions, you're often buying much further below peak on the next home. That gap compression is where opportunity lives. This is what buyers often start to notice in real life. A budget that once limited a search to Souk now begins to surface options in Langford. A condo search that once meant pre-2000 buildings now includes newer construction in better locations. A middle unit becomes a top floor corner unit, or the same unit but now with extra parking or storage. The budget hasn't changed, the choices have. One important note: more listings don't automatically mean better homes. Early in market shifts, the first inventory is often made up of properties that struggle to sell before. The best homes usually appear later once pricing expectations reset and motivated sellers with high quality properties step back into the market. That's why the most successful buyers right now aren't just patient, they are prepared. Buying up in a softer market isn't about chasing discounts or timing the bottom. It's about recognizing when selection improves, pressure fades, quality quietly rises, while others remain focused on headlines. If your next move is driven by space, location, lifestyle, or long term fit, calmer market conditions can actually be one of the best environments to make that transition thoughtfully and strategically. Not to rush, not to guess the bottom, just to understand what your money buys today compared to before. So when the right home appears, you're making a clear, confident decision instead of an emotional one.